Good evening and namaskar. Today we will see one of the premier private banks of India, HDFC Bank. We have three large private banks, HDFC Bank, ICICI Bank and Axis Bank, followed by medium-sized banks like IndusInd Bank, Yes Bank, etc. Most of these private banks are performing well. Yeah, especially HDFC Bank is performing very, very well consistently. Therefore, we will see its results also. The bank is headed by Aditya Puri as Managing Director and Kaizad Bharucha as Executive Director. Now we will see the Q4 FY19 results. The total income for Q4 is 31,204.5 crores. 31,204.5 crores, up 22.1% from 25,549.7 crores in Q4 last year. So, total income is 31,204.5 versus 25,549.7 crores, up 22.1%. Then net interest income plus other income, that has increased by 20.7% to 17,960.7 crores from the Q4 of last year. So, the current income is 17,000 net interest income plus other income, 17,960.7 crores, up 20.7%. The net interest income, the earlier we saw net interest income plus other income. Now, net interest income means interest earned minus interest expended. So, if you calculate that net interest income, that has grown by 22.8% to 13,089.5 crores. So, latest is 13,089.5 crores. It has grown by 22.8% year on year. It is driven by average asset growth of 19.8%. Assets have grown. See, assets means the loans which have been given to people are the assets for the bank. Now, on that, the bank is earning interest. So, the asset size is growing means interest also will grow. And the core net interest margin of 4.4% is quite impressive. The net interest margin of 4.4% means the interest collected on loans minus the interest given on advances, etc. Taken, that is deposits, etc. So, that difference is 4.4%. That's actually the major income for the bank. The interest given minus the interest taken. Other income is a small amount, 4,871.2 crores, which has grown by 27.2%. The four components of other income were fees and commissions, foreign exchange and derivatives, gain on revaluation or sale of investments, and miscellaneous income. Now, there is another crucial ratio, cost to income ratio. The cost should come down, income should grow. So, cost to income ratio should be favorable. It is now 40.1%, has come down as against 40.6% earlier. So, cost to income ratio, the idea of the bank should be to reduce it as much as possible. Now, from 40.6% last year, it has come down to 40.1%. Provisions and contingencies are 1,889.2 crores, which was earlier 1,541 crores. Profit before tax is 8,954.4 crores, up 22.8%. Profit before tax is 8,954.4 crores, up 22.8%. Tax was 3,069.3 crores. Now, the crucial picture, net profit, 5,885.1 crores, an increase of 22.6%. Net profit has increased by 22.6%. There were times when HDFC produced a net profit growth of 30% also. 25% was normal, but this year, this quarter, it is 22.6%. Now let us see the annual figures. Year ended March 31st, 2019. The total income is 1,16,597.9 crores. The net interest income plus other income is 65,869.1 crore, up by 19.1% from Q4 of from FY18 last year. The net interest margin is 4.3%. Earlier we saw for Q4 it was 4.4%. Now for the whole year also it is 4.3%. It is extremely good. It shows that bank is having very sound management policy. The core cost to income ratio here is 41.7%. That's also quite good. The bank's net profit for the whole year is 21,078.1 crores, up 20.5%. Now, see, earlier we saw net profit for Q4 was 5,885.1 crores, up 22.6%. But for the whole year, if you see that 21,078.1 crores, up 20.5%, reasonable, quite healthy. The balance sheet size now. Balance sheet size is 12,44,541 crores. So there is a method of calculating the balance sheet, assets plus liabilities, etc. That total gives 12,44,541 crores against 10,63,934 crores last year. Total deposits are 9,23,141 crores. 9,23,141 crores, an increase of 17%. Over last year. CASA deposits. You must know about CASA deposits. They are very negligible cost deposits. That is a current account on which a bank pays almost nothing, and the savings bank account on which it pays minimal. So that is called CASA, current account plus savings bank account. That deposits have grown by 14%, with the savings bank deposits as 2,48,000 crores and current account deposits 1,42,000 crores, something like that. So the CASA deposits have grown quite impressively. In the total deposits, after this growth, the CASA deposits are 42.4%, which is very, very impressive. That is, the bank is not taking too much of fixed deposits, etc., on which it has to pay higher interest. It is taking current accounts and savings bank accounts. The liquidity coverage ratio is very healthy at 118%. The total advances, now deposits we have seen, CASA deposits, this deposit, that deposit, etc. Now advances are 8,19,401 crores, an increase of 24.5% over last year. Now on these advances it collects interest. On deposits it has to give interest. The difference is its income. So net interest income, that 4.3%, 4.4% is that. Now capital adequacy ratio is 17.1%. Quite good. Dividend, it is now giving 15 rupees per equity share of rupees 2. Face value 2, but dividend given is 15. Last year, against face value of 2, it gave 13 rupees. This time it has increased to 15 rupees. Network, if you look at that, 5,103 banking outlets are there, and 13,160 ATMs are there in 2,748 cities or towns. Number of employees are 98,061. There is a small growth there. From 88,000, it has gone to 98,000. Asset quality. Gross non-performing assets are 1.36% of the gross advances. Gross non-performing, it is quite good. 1.36% gross NPA is quite good. Coverage ratio is 71%. NPAs are covered 71%, which is quite good. Now, if you come to net non-performing assets, it is 0.4%, very impressive, of the net advances. 0.4%, that is the net NPAs, which is quite good. The provisions are 117% of the gross NPAs, that is also quite good. There are some three subsidiaries. HDFC Securities Limited, which is among the leading retail broking firms in India. It has earned a profit of 329.8 crores this year. HDB Financial Services Limited. HDB Financial Services Limited is a non-deposit taking, non-banking financial company. NBFC, but it is non-deposit taking. There, HDFC Bank holds 95.5% stake. So its balance sheet size is 56,540 crores. It has earned a profit of 1,153.2 crores. Now, after seeing the subsidiaries, let us also see, earlier we have seen the balance sheet, etc. That is for the HDFC Bank. Now, let us also see consolidated financial results. The consolidated net profit is 22,332.4 crores. Consolidated net profit is 22,332.4 crores, up 20.7% year on year. Advances grew, consolidated advances grew 24.2% to 7 lakh crores. So the position is reasonably good. HDFC Bank is one of the banks which is preferred for investment. It will grow steadily. It may not be a multi-bagger in 1 or 2 years, but the growth is very steady in HDFC Bank. But last year, of course, 2018, the growth was very less for almost every company. The current market price is 2,291. Earnings per share is 21.6. Therefore, price earning comes to 26.52. Not very high, not low. Volume of transactions is quite good, 26 lakhs above. So, buying and selling, there is no problem. 52-week low is 1,884. 52-week high is 2,332. Current market price is 2,291. So, current market price is somewhere nearer to the 52-week high. So, last year the growth in price was hardly 18%. Now, but current year, if HDFC Bank performs according to its normal standards of 25% growth in net profit, you can expect 25% growth in market price also. And if last year is made up, the growth may be much more also. So HDFC Bank is one of the premier banks of India, and it is worth investing for steady growth. You can't say multi-bagger growth, steady growth. Thank you. I'll be back with you with another good company.